This is Jim Emter, Van Ahn Co, Alexandria, Minnesota, with the closing grain and livestock comments for March 22nd, 2019. Corn on the day up 2 cents, soybeans down 6 to 7, Chicago wheat up, down a half, Minneapolis wheat up a penny to down a penny, and Kansas City wheat down about 2 cents. On the week, we had corn up 5, beans down 5.5, Chicago wheat up 3 3/4, Minneapolis up 17.5, and Kansas City up 2 cents. So really the grain market's trying to build on last week's reversals for corn and wheat and carried through here to some degree this week, which was encouraging to see. Now it's a matter of what's ahead. We've got flooding type conditions. We've got China in the U.S. buying 300,000 metric tons of corn. So we've got some excitement around the market, but we need to continue to watch African swine fever and its impact out of China. I think the market was somewhat surprised at China coming in here and buying corn when there's concerns that consumptive measures may be down quite a bit as a result of African swine fever, but it also may bring optimism that we're that much closer to a trade deal. So time will tell. We're going to watch the flooding very closely. That's going to really be the feature the next 2 to 3 weeks. And what we need to understand is, as these rivers crest and as we get near this time frame where late April, May are kind of those ideal dates, if we continue to get rain, that may be a problem, but also we can dry out very quickly and get this crop in the ground. So transition point coming here, key date around that April 15th week. We'll have to try to transition and do our best to navigate through here. We do have a quarterly stocks as well as a plant report next week. A lot of the trade around this 91.5 for corn, 81.5 for soybeans, or 85.5, excuse me, for soybeans, and those are the trade expectations coming in. On the feeder cattle side of things, we were kind of choppy at best, both feeders and lives. The hog market steady to up $1 with a big window of trade today, nearly $6 to $8 of ranges for the contracts. On the week, we had feeder cattle up 167.5, live cattle up 62.5, hog market up 952.5. Price counts off the June rate now, 101, and then all the way up to 120. So we've got some big counts around. We think it's extremely important here as we get to the high 90s to low 100s that producers are establishing their base protection, but trying to allow for some form of upside there within the parameters. Nothing perfect here, but when this market, if the market does turn, when it does turn, it can turn very quickly and be tough to get on board. So important to do some marketing along the way there for the hogs, but you got to keep your sanity too with the margin risk. On the cattle side of things, we're up near the top. We got investment funds, managed money near record longs, and we'll just have to kind of manage through that. But we're kind of getting to a seasonal time frame here where we tend to see pressure on the live cattle, and the cattle on feed report was about 6% above expectations on placement and 1% above expectations and on feed, so a bit bearish there. This has been Jim Emter, Van Ahn Co, Alexandria, Minnesota. Trading in futures and options involves risk of loss and is not suitable for all producers. Past performance is not indicative of future results. This is a solicitation. Have a great weekend.